The following is a technical analysis on 3 identified top stock picks for the week that I will be closely monitoring. Additionally, I'm keeping an eye out for potential long and short trade setups, especially with the anticipation of rising yields as a potential catalyst in 2 separate sectors within the biotech and home builder sectors that I will be monitoring closely for additional setups and or key inflection points to be breached. Starting off with Spyre Therapeutics, a company of the healthcare sector and biotechnology based upon the weekly interval. And I believe we've reached a key transitioning point where we have a beautiful, well-defined inverse head and shoulder classic looking bottom where the outer layers of the much larger time frame and or intervals can usually transpire in overpowering the more near-term intervals. And I believe we've reached a critical juncture based upon the 50 weekly exponential moving average hovering in as a price support level around the $18 range. And this could be the beginning stages for a much larger rally to the upside if and when some of these key transitioning points are reflected upon with huge volume at price indication around this range. I would only anticipate some further upside to come if and when some of these key resistance levels are breached. You do have the price percent oscillator shortening and overcutting its zero line threshold to the upside in anticipation, gearing up where health is being poured back into the momentum indicators, zooming you into the daily interval. And this is what is transpiring with additional price support levels off a symmetrical triangle pattern. That could be the ultimate inflection point where you have the 2192 price support hovering in down below and additional 50 exponential and the 50-day moving average hovering in up above with a primary uptrend support off the June 2003 major reactionary lows here. And there's some key definitive transitioning zones that could load up and gear up on a potential whipsaw-like reaction and or breakdown. Undercutting its whipsaw-like reaction could transpire into some additional longs, honing in up for a 34% move. Make no mistake about it, this is duo price support hovering in up above the 50-day moving average, so you could begin your potential starter position or breakout could have already occurred here off the daily interval. And that could transpire into some key transitioning points up above if and when we get that back test that would offer the most valuable long trade setup for a dollar cost average scenario up to the first target, call it the 28.36 price resistance, and then ultimately re-challenging the $34 range in confluence of a primary reactionary downtrend line resistance level for 64% in gains. And if we take that level out, that will be the neckline to the inverse head and shoulder classic looking top. And that alone would taking that inflection point out for 50% gains from where we stand now would more than likely result in a very powerful infused move up to the 49.03 price resistance for 104% gains to the upside and an additional target at the 70.38 price resistance for 195% in gains. With setting some stops below this primary reactionary uptrend line, short sellers, they want to see a solid daily infused big breakdown candle, infused breakdown below that key inflection point, call it triple transitioning price support level for a short trade opportunity down to the 1553 big price support level. That is the biggest key inflection point that we're honing in on, closely monitoring the 200-day moving average down below. We are testing the zero line threshold in the percent oscillator and the moving average convergence. So this could be the bottom for any technical momentum on a prolonged move setup to go on to re-challenge once again these key transitioning point. Make no mistake about it, support is price support until broken. Call it a dual price support level offering in a long trade setup scaling in process on a dollar cost average basis upon the trendline price support level, which would be a nice bear trap whipsaw-like reaction. And again, some key additional targets to hone in on for a great risk reward analysis to the long side. Taking you out to Phathom Pharmaceuticals, a company of the healthcare sector and biotechnology based upon the daily interval. And what we have here is a beautiful, well-defined, bullish falling wedge pattern with a confirmed divergent low with big positive and or bullish divergences constructed amongst all 4 key technical momentum indicators, with additional bullish crossovers in the price percent oscillator and moving average convergence that as significant value where we had a well-defined big breakout, confirmed breakout amongst this bullish falling wedge pattern to go on to retest and quickly was resulted in a inflection point that was retested and neglected amongst the 200-day moving average. Make no mistake about it, this is a well-defined big breakout where you could begin the scaling in process back down to the 896 price support down below, and or if and when there's a monumental crash back down to the revisit and or backtest of the primary reactionary downtrend support in confluence of the 805 price support and 50 exponential and 50-day moving average, call it a triple transitioning demand zone price support level, which would be a 15.3% crash from here, ultimately shaking out a ton of long trade and or technical traders, which would offer the most valuable long trade setup to the upside, honing in on to re-challenge 896 price resistance for 14% in gains, up to the 992 price resistance for 26% in gains, 1133 for 44% in gains, all the way up to the 1335 price resistance for 69, call it 70% in gains. And if things were to get extremely bullish, back up to the 100% gainer to the 1570 price resistance up above. Make no mistake about it, you could begin the scaling in process carefully with caution. That would begin a great scaling in process on a dollar cost average basis back down to the primary downtrend line. Long traders and or technical traders do not want to see an overshoot, momentum fueled overshoot back into the range, undercutting its 50 exponential moving average and downtrend support level. That would be extremely bearish for a false breakout to occur. And this could be beginning stages for a much larger picture in the daily interval on a bullish straight line up move, overpowering potential shorts in the pool, only squeezing the underlying security to the upside on a much more prolonged rally. Taking you out to KB Home, a company of the residential construction sector based upon the daily interval. And what I see here is a well-defined, classic head and shoulder looking top, reflecting off its 50-day and 50 exponential moving average with a huge volume at price indication around this range where the vast majority of the masses have stepped in with technical and or retail traders. This provides a very exceedingly imperative inflection point that could be tested amongst what you would call a neckline off the head and shoulder classic looking top. And here are your levels to watch. Based upon what we got was a well-defined big divergent high. We had negative and bearish divergences confirmed on all key technical momentum indicators, which resulted in a technical induced drop of 7%. And we have been, make no mistake about it, in a consolidation range since that inflection point within the technical momentum indicator space was concluded. We are violently consolidating sideways with an additional near-term exaggerated divergences, bearish divergences on all three technical momentum indicators. Make no mistake about it, this is a very pivotal inflection point with the 50 exponential moving average hugging the neckline off the head and shoulder classic looking top here. That would be the ultimate breaching point where long traders and or bull traders would need to defend this primary reactionary uptrend neckline support level at all costs, honing in on to redefend and or re-challenge these negative and bearish divergences that were confirmed on all three technical momentum indicators. Short sellers will be looking for a solid daily infused breakdown candle below its neckline and undercutting its 50 exponential moving average, offering in a great well-defined risk-reward analysis short trade setup to the downside. The first target on a complete backfill of the gap, the 58.07 price support for a 3.8% crash, honing in on to 55.44 for an 8.3% crash, down to 54.74 for a 9% double-digit crash on a complete unfilled, unchecked gap price support level. Ultimately, if things were to get really bad, back down to the 51.64 price support for a 15% crash and an additional unchecked and unfilled gap, down testing its 200 exponential and 200-day moving average would be the ultimate key inflection point to watch. Make no mistake about it, that is as bearish as the technical momentum indicators are showing a perfect confluence of factors where one of my preferred trading patterns is capitalizing on a classic head and shoulder top. This pattern often coincides with the awakening of the masses to the impact of a rising yield curve, particularly affecting sectors like home builders. I believe a ton of stop orders and or pivot points, ton of short and or stop orders will be hit in a cascading effect, only triggering a widespread panic in the technical trader in the masses rushing towards the emergency exit doors.